Hi guys, this is Simon with Trade and Perform Coaching with the trade review for Thursday, November 21st, 2013. And man, I can already feel the turkey coming. It's going to be a good week next week. And it looks like we'll be at new all-time highs maybe by tomorrow. So new yearly highs at least. So, and the Dow, I'm sure the headline was, closed at 16,000. And pretty sure CNBC is breaking out the 16,000 hats. So, anyways, today was an interesting day. I put the pre-market prep that I do for my clients on the video below this one, so you can see it. The recording quality wasn't so good, and I felt the presentation wasn't my best, but the points that I made in it were pretty much spot on. Okay, so coming into the morning today, we had NQ trading near the highs. We had ES trading near the highs. Right, we were about a point off. And so the first thing that I did when I came in the morning, and I want to keep this brief because essentially what we ended up with was a trend day up, right? And so let me show you this here real quick. Get rid of this. Let's see if we can expand this for a minute. Okay, so this was ES on the daily, and I'm going to just compact it here, right? And this was the down channel that I had pointed out in the video, the exact same one. I didn't move a thing on it, right? And I pointed out we had an uptrend going over here, and from yesterday we had finally established an uptrend there at the end of the day that was carrying through into today. And I said we're running right up into this upper end of the channel, and obviously what's going to happen is we're either going to break or we're going to hold. So obviously what we ended up doing was we broke, we had a backside test, okay, and then we took off. So obviously that's very easy to see looking backwards, right? But if you go look at the video, you can see that we were kind of setting up there, and what my suspicion was that we were going to reject off the top of this channel, right? But I said if we don't and we get above, you have to leave open the idea of a trend day up, and if we could get above that, if we could get above the white zone, right, above this 1788 and hold, that we had a damn good chance. See, it doesn't look the same when you break it down to a smaller time frame, does it? That we had a damn good chance of just continuing higher all day. And so what we ended up doing was just that. We gapped. We did reject the first time into the white zone, and I suspected that might happen. We had a nice stretch here, right? And we got the 2 points, and I was actually trading it this morning for us to hold that trend line. So how did I manage that? The way I managed that is I took half my P&L, half my profits at +1, and then just moved the stop to break even. And sure enough, it came back and got me. And you know, that's never fun when it comes back and gets you. But look how much money it saved me, right? Versus sticking it and taking a big loss, right? And instead of going in and saying I did not catch, and perhaps I should have, that going into lunchtime that this was a pullback. Actually, I had left here at 11:30 now that I look at it, right? And I had put out a limit for short at 1792, right? So immediately, my second move was right after the news, which was right here at 9 a.m. We kind of popped up right to the back of the white zone, and the stop is normally 2 points behind, for me at least, sometimes 3, but usually 2 points behind the back of the white zone. So this trade had a 4-point stop. This trade, I only needed a 2-point stop. I had made a net of 1 point here, so if I'd gotten stopped on the position as a whole, if I'd gotten stopped, it wouldn't have been the worst thing in the world. And I ended up getting another 2 points on half. And then I gave back just a little bit on the second half, and I netted out 1 point on the position as a whole. Half a point on the position as a whole. So wasn't a great victory, but if you look at how I managed that trade, right, I was positive. I was essentially trapped in what ended up being a trend day up. I didn't know it at the time. We were still underneath prior day's highs. And then what you'll notice is I stopped, right? I stopped throwing trades out there, and I waited patiently. And one of the things that traders will do when they get frustrated, when the market doesn't act as they think it's going to act, right, is they'll keep exit, enter, exit, enter, exit, enter. And you'll notice I waited a good long time, right? I didn't get close to getting another trade filled. Well, I guess I came close at around 9:45, and then I missed it by a tick, and then we started consolidating underneath. And my concern I didn't get filled here. Then it came up and it just ticked the zone at 1792 even. It would have been very, very hard to get filled here. And so I moved the limit up to 1793. And the reason for that is when you consolidate underneath the zone, or even on top of a zone, the odds of that zone getting swept through become much higher. So I moved it back, would have required a 3-point stop, and had I stuck around long enough to get filled, which was all the way at 1 o'clock, the best I could have done would have been 1 point on that trade. Maybe worth it, maybe not, who knows. It really didn't push much beyond that. They tried to push it up here to this 1796. It didn't have enough juice to get up into this zone, but I'm going to assume that overnight we're going to be able, or tomorrow, we're going to push up into this zone. And odds are, my guess is we're going to go up here and push into this either 1804 area or even higher, this 1810. That's my guess, and I think we probably have good odds of letting it happen overnight, that move will be stolen from us. So that was the major theme for the day, and it's important to note, had I managed the trade that way because I thought we actually had, the way I did, because I actually thought we had a good chance of coming back in here later and attempting a gap fill. It did not happen. So now I want to move over to my next point, which is managing fear and expectations in a trade. Okay, I do not know which trades will blow against me. I have no clue when I enter the trade. I have simply accepted that whatever the trade requires in a stop, right, that I accept that. I don't think about it much after I put the trade in. Occasionally, after I take my profit, I might move it down, right? I might think, well, what's the most logical way to handle this trade? But that stop's already in there. From the back of the zone, I know where I'm going to put my stop when I enter the trade, and I don't care if it gets tagged. Just, it's okay with me. It's all right. The reason why is I've run these trades hundreds, if not thousands of times at this point in my life, and I know some of them are going to get tagged and some of them don't. One of the ways that I try to prevent getting tagged unnecessarily is I will look at the size of the rotation, right, that I'm taking when I take that zone, right? But that's just a filter. It's not really, and it lets me adjust where in the zone I'm going to take the trade, but it sure as hell doesn't keep me from getting stopped, right? And so fear is fairly insidious when you're trading. If anyone knows or has followed me, I love Mark Douglas's work on trading in the zone, and he had a prior work, The Disciplined Trader, prior to that. And the quote from there that I really, really love is this. It says, "In the market, the fear of losing one's fortune is every bit as intense as the fear of losing one's life from an attack by a wild animal." I don't think, okay, I could put the difference between consistent winners and everyone else more simply than this. The best traders in the world aren't afraid. Okay, so then comes the question is, how do I keep myself from being afraid? Okay, well, the first thing is I developed a specific spreadsheet to keep very close stats on the trades that I shoulda, coulda, woulda took, right? Those were setup trades that either I wasn't here or I couldn't get entry, or looking back, I should have taken that trade. It was my setup and I missed it, right? And I do all the same detail on it. I look at how far did it go in my favor, how far did it go against me, how long was the trade, that kind of thing. Where was it in the zone? What was the price? All these things. And that's my shoulda, coulda, woulda account. And I'd be a billionaire if I'd taken all those trades, right? And then I'd look at the trades that I actually took, okay? And in those trades, between those two separate spreadsheets, I can actually tell how far my average trade goes against me, and it varies from year to year, right? But I can closely monitor that. I can see what's the average amount of points the trade goes in my favor, what's the average amount of points it moves against me, and am I scaling properly? Do I have to increase my scales or decrease my scales, right? The most effective way psychologically to reduce anxiety in the market is having a very specific trade plan on what your trade looks like, not on what the market's going to do. We have no idea what you're going to do at certain points in the market, right? And the best trades are always going to look damn scary. People always want confirmation. Most people, it's natural, right? I want to go long when the market's up. I want to go short when the market's down, right? And generally, right? Buying pullbacks into uptrends works, but that's trend following, right? And what everyone wants, hold on one second. I apologize, I got interrupted by my ESPN, just went nuts there for a second. I guess that's an Amber Alert. At any rate, the point being that if you don't have your specific trade plan, for example, my trade plan called for, with a good rotation into the white zone, I would expect rejection the first time down. That was the trade plan for me. I got a good stretch into the zone, and my stretches vary for what I'm looking for, but in this market, I was comfortable with the particular stretch the market had taken. I took my trade, I put my stop behind here, I tweeted it out live, and I had my profit target set in before it got there. That's the whole point. Now, why did I do that? By doing that, I eliminate the amount of thinking I'm doing, right? It's really out of my hands, and I accept that. B, my only choice was I going to scale half or take all of it, right? Those are my two choices. I took half. Why? I thought we could come back in for gap fill. It didn't happen. It's okay. It's no big deal. I got stopped. Cool. Right? But none of that caused me fear. It was more like amusement. It's like, oh, they stopped me. There you go. What's the information in that, right? Well, if you listen to the trade plan below, my assumption was we would drive up on the open, maybe get a little bit of rejection, but net, we're going to go nowhere prior to the econ number coming out at 10 a.m. Maybe something would pop. We had a Fed speaker come up at 8:45. And I'm sorry to be speaking so fast, but this will cut me off here at 15 minutes. I like to try to keep them underneath 15 minutes. So when we moved up here and then the number came out and we didn't pop, right in these first couple of minutes, even before then, even before the number came out, I figured I've got 2 points of risk here. And that's okay with me. I got 1 point already. I'll take another little bit of risk and maybe the trade will work out. I put it in. I didn't get tagged out when the news came out. It gave me a 2-point rotation. I got half. And again, I was going to try for the move down. I put a little stop. Behind, wow, excuse me. We had another Amber Alert here. And my phone just went nuts after my TV went nuts. So I put a stop 2 points behind. And then when I took my 2 points, I moved my stop down to the high of the day plus 2 ticks. As it turns out, it came back, snagged it. And so this is important here. When it snagged it, I didn't react, okay? And when you are trading scared money, it's exactly what happens. You need the trade to work for you, okay? Because you need to make money. And you constantly are vacillating between, I hope I don't get my stop hit, and I hope I get this huge trade so I can blow my account higher in terms of equity, how much equity I'm going to have in my account. And you keep oscillating back and forth. And for those of y'all that this applies to, you know what I'm talking about. And it is fearful trading. It makes it almost impossible to take a short into a huge green candle like this. And it makes it almost impossible to take a long into a nasty red candle. And to go to that point, right, I want to show yesterday. This is yesterday's trading. Let me see here. Did I get this right? Let's get rid of this and then do this. Okay, so yesterday, if you look, okay, it was really hard to get a clean entry. NASDAQ was beautiful yesterday, but in the morning, it was hard to get a clear entry. I did not take this trade because it was identical to what we had this morning. The NASDAQ was opening near the high of the day. ES wasn't far from it, and I did not have enough of a rotation here to make me, or stretch to make me want to take this trade. Okay, turns out that it worked. It gave you your 2 points, not once but twice. But I didn't take the trade. Instead, I took the NASDAQ long. It worked out much better. But okay, so the next area I wanted to short was here at initial resistance. I didn't quite get it. But even if you were taking this short right here at 1793 3/4, right? This is now a beautiful stretch at this point. And if you had waited, right, and you say, I'm going to wait and see what happens, the rollover, by the time you got a fill, you may have been shorting here at 1791, okay? Now look at the difference, and I'm actually going to continue this recording. I'm going to make a second recording to follow up on this thought process, okay? So I'll end this here and I'll upload it. Just go to part B.